Let's talk about something huge that's happening right under our noses. While most of us are caught up in the day-to-day headlines, there's an argument that China is playing a much, much longer game. A game that could completely reshuffle where global wealth is held. So today, we're going to break down what this global resource reshuffle is really all about. So, the big question we're digging into today is this. Are we witnessing a historic transfer of wealth right out in the open? The idea is that we're seeing trillions of dollars on the move. But not from one bank account to another. No, this is a shift from paper money into the actual, physical stuff that builds and powers our modern world.
All right, let's get into the first piece of this puzzle, China's grand strategy. The argument here is that China has moved way beyond just being the world's factory. They've got a new long-term plan, and it's all about one thing, controlling physical resources.
And the main idea? It's actually pretty simple, but the implications are massive. For decades, China piled up enormous reserves of US dollars. Now the thinking goes, they're systematically trading in that paper currency for the physical building blocks of the 21st century economy.
And we are not just talking about one or two things here. This is a shopping list for a superpower. It's everything from the copper needed for our electrical grids, to the lithium and cobalt that go into every electric vehicle battery, and even the gallium and germanium that are absolutely essential for semiconductors. It's almost like a strategic plan to secure the entire periodic table.
Now here's where we see the real power play. It's not just about digging these materials out of the ground. China controls something like 80% of the world's processing of rare earth elements. You know what that means? It means that even if another country mines these metals, they often have to send them to China to be turned into something usable. That gives them incredible leverage over the entire global supply chain. And this quote from the source really just nails it. It's a straight-up exchange. Financial assets, like United States dollars, are being dumped in favor of tangible materials, metals and minerals, that you can actually use to build things in the real economy.
Okay, so that's the big picture strategy. But what does this look like when the rubber hits the road? Well, the source we're looking at points to the silver market as a perfect real-world case study, and it shows this whole dynamic playing out in fascinating detail.
You have to see this. The source points to silver prices jumping by 150% in an incredibly short amount of time. Now, that is not a normal market move. That's the kind of explosion that sends up a flare, signaling a massive shock to the system where demand is just completely swamping supply.
And this is where it gets absolutely wild. There's a silver fund in China where, according to the source, investors were paying a 60% premium. Just think about that for a second. That's like paying $1.60 for something that's only worth $1. That signals a desperate, almost frantic rush to own the physical metal, no matter the cost.
And this gets right to the heart of that fear. You have to understand the difference between paper silver, which are just financial contracts, and actual physical silver. The source claims that there might be over 100 paper promises out there for every single ounce of real, physical silver that can be delivered. So you can see why, when people start to doubt those paper promises, they make a mad dash for the real thing.
Now, let's be fair. The source itself says that this crazy behavior in the silver market is a speculative mania and that it can't last. But, and this is the really important part, it argues that underneath all that speculative foam, there is a very real, very fundamental story, a strategic push to lock down a critical industrial metal for the future.
Okay, so we have China's big resource strategy, but it's not happening in a vacuum. Let's pivot to the third part of this story, because there are other major global forces at work here, and they're creating some serious headwinds for the United States dollar. One of the biggest of these headwinds is coming from Japan. Just look at this chart. Their government debt is absolutely staggering, about 250% of their entire economy. A debt load that massive puts their central bank in a really tough spot, and it forces them to make choices that ripple across the entire globe. So what's this got to do with the dollar? Well, to stop its own currency from collapsing, Japan has to raise interest rates, but that makes its enormous debt even harder to pay back. So the argument is, to get cash, Japan might have no choice but to start selling off its massive holdings of US Treasury bonds. And when a huge owner like Japan starts selling, that can push down the value of those bonds and shake things up. And at the very same time, a giant financial trade that's been propping up US markets for years is starting to reverse. It's called the yen carry trade. For a long time, it was simple. Investors would borrow Japanese yen for basically free, swap it into US dollars, and buy US assets that paid a higher return. But now that Japan's rates are going up, that free lunch is over. The whole trade is unwinding, and a huge source of buying pressure for the US dollar is just vanishing.
So you step back and you look at all these pieces on the board. You've got China's long-term resource strategy. You've got these huge financial pressures from countries like Japan. What happens when you put it all together? The argument is that we are watching the beginning of a completely new economic game.
What we're really talking about here is a total paradigm shift. For the last few decades, global power was all about financial assets, about holding the world's reserve currency. The new paradigm, according to this analysis, is one where real power is shifting to those who control the physical resources that everything else is built on top of.
So you see how all these different forces start to connect and reinforce each other? You've got China trading its dollars for physical stuff. You've got Japan unwinding financial trades that used to support American markets. And underneath it all, global trade is slowly but surely starting to move away from being totally dollar-dominated. These are not just separate events. They're all parts of a single, massive, unfolding story.
The conclusion from the source is powerful, and it's direct. This isn't just another up and down in the market. What's being described here is a generational shift, a fundamental redesign of the architecture of the global financial system that's been in place for over 75 years.
And so that leaves all of us with a really critical question to think about. If this argument holds water, and we really are moving from a world of financial power to a world of physical resource power, what does that actually mean for the future? As this global competition for stuff gets more intense, what is it that will truly define wealth for the next generation?